Why is gold falling and where are we going from here? Well, that's what we're going to take a look at in this video. Going to be looking at the latest commitment of traders data. We'll take a look at the seasonal patterns as well that are impacting gold. We're going to start with looking at the chart. We'll see towards the back end of last year, the seasonal bias is down through August, September, and then through October. And then typically we have a seasonal rally through December. But as we move into 2021, the post-election cycle typically sees weakness in gold, and we've seen that continue to drift to the downside. I think we're going to see that continue down to around 1680, 1650 area before a bounce in here in March. I think early March we can see a bit of a rally, but ultimately I see gold going lower. I think we can have a bit of a bounce in through here, but through the next few months I see us heading lower towards the 1500s, 1450 region before the possibility of a next significant rally in this market. I will say before we get into it a bit more detail, particularly looking at the COT data, is that the path from here is not taking into consideration where the dollar index is going. If we have a significant rally in the dollar index, if we see a breakout above the highs here at 91.50, then the path for gold would be significantly weaker than this. So if that is the case, and I think there's a very real possibility the dollar index is still building in here, and I think towards the end of March we move into April, we do see a rally. But I'll update a video, I'll make a new video if that is the case, if that is the pattern we're seeing, and I'll update that and how the impact will be on gold. But from where we stand at the moment and what we currently see, my path is for gold is to head lower, bounce around this area, have a bit of a rally, but I don't see a major rally from this point. I think we'll see a bit of a bounce. It could be quite rapid to begin with, but I think we're capped around the 1800, maybe 1850 max before drifting lower as we head into April, May, and into the summer. The reason for that, if you've been following any of our recent videos, you will know I've talked about, particularly since the beginning of the year, we don't have the conditions in gold for a rally. The conditions are not in place. We do not have the buying. The buying's on the wrong side. We actually see those buyers leaving the market now. But we drill down into the latest data, and particularly we're looking at the commercial shorts that I've talked about over recent months. Have we seen this correction actually all through towards the end of last year as well? We've seen a very stubborn short position, which might look small relative to where we were actually at the peaks at the middle of last year, but historically that 400,000 contracts is actually a very high level of shorting that we've seen by commercials, and they're very stubborn at maintaining that, which isn't a bullish condition. That's a lot of weight that's going to drag that market lower. They don't see it going higher, and therefore they maintain those short contracts. Now, interestingly, they have started to drop that off. We're starting to see them being cut as prices dropping. They're starting to cut those shorts. But in terms of actually seeing something, a really bullish condition, you will see we don't typically get rallies until we see the COT index up towards that 100% area. You can see the rallies that we typically see in the market from that point. Some larger than others, but we're getting rallies from that point. And we're nowhere near that area, and the reason for that is we are not buying. We do not have buyers in this. In fact, they have zero. And to look at where we are, one of some of the really low levels that we've seen in recent years in terms of buying in there. So we're seeing a slight cut in the shorts, but nowhere near enough in terms of being bullish. I think in terms of seeing the next major rally, we need to see those short contracts drop probably to around the 200,000 contracts. We need to see buying interest pick up in here, similar to the levels we've been at in the past, back up towards the 200,000. We need to see a big change over the coming months if there's going to see any significant rally. We can still certainly have a bounce in here, to say the March bounce typically get a little bit stronger. But in terms of actually a significant leg higher, the continuation of a bull market, I don't see that happening now. In terms as well, looking at the speculators, those long contracts, those buyers that we have in that market, they're being flushed out, and we need to see that drop down. We see the non-reportable contracts, we need to see them get into towards the lows, down towards the 40,000 areas. If we look at the non-commercial contracts, very similar, they've been flushed out as well. Those buyers are leaving the market, but still at a relatively high level. In terms of seeing a new bull market start, again, you want to see those longs being cut. You want to see the buyers coming out of that market, which frees up the market for really seeing an acceleration to the upside. And I say same as with the commercial shorts being cut, we want to see them drop to around the 200,000 contracts. We want to see the speculative longs drop to around that level as well, around the 200,000 contracts. That would really free up gold to make a significant low and start to really have a major rally, which is say don't see until at least until the middle part of 2021, which I'll talk a little bit more in a second. Looking at the seasonal pattern, just to give that path a little bit of context, we look at the election cycles here, the seasonal patterns on our website. Take a look at gold. The election cycle, which is the post-election years that we're looking at here, and the purple line, there's a lot more bearish momentum in a post-election year to what we historically have, and gold's been very, very close in terms of following that path. There is a possibility, as I say, of a bounce in here in March. Generally, most of historical patterns typically make a low in March and see a bit of a bounce up ahead into April. The post-election cycle typically sees that rally in March as well. So I think we can see that, but you will see ultimately I do see us moving lower. May see a bounce in here, but you can see all of the patterns typically head lower into June, July or August is when we typically see a lot of acceleration in the gold market. Silver is similar to that, and something as well which we'll touch on in a second here as well is the US Treasury bonds are typically bearish as well. We can see the 10-year has started to accelerate through the middle of February, and we expect to see that continuing lower. Fits in nicely with a low towards the latter part of March, and then to see some strength. Looking as well at the long-term 30-year bonds, we look at them seasonally bearish as well with the post-election cycle. We don't see a low to the latter part of March, which is very significant. So going back into the gold chart, as I say, I think we were seeing it very close to a near-term low. We'll see an acceleration down towards the, say, 1650 area, and I think that's where we'll see some buying interest coming in, and we could be capped in around here, around the 1800 again, but say ultimately moving lower from that. Going a little bit further from that, I want to take a little look, and there's something that is very significant. And looking at the bond chart, I want to draw your attention to something that's really, really significant in terms of where we're at the moment. We go back a little bit, first of all, go back here to 2012. We'll see the summer of July in 2012. 2012 was an election year. We topped in the summer and we seen bonds moving lower, and we didn't rally or make a bottom until the January of 2014. Fast forward then to the next election year, 2016. Again, the summer of 2016, we seen bonds top, moving lower, accelerate lower, and continue lower until 2018, which we started to rally. Fast forward to the most recent election year, which obviously was last year, 2020. Again, we look at the top. There's a spike in here, but either way, we can see the top in the summer or in the election year. We're moving lower again, same as what we did previous election cycles. We're accelerating a lot lower in here. If that is to continue, then what we could potentially be looking at is bonds having a bit of a bounce in here, similar to where gold is close to that. Have a bit of a rally in towards here, back up towards 168, but bonds ultimately moving lower, potentially not making another significant low until we get into early 2022. The reason why I draw attention to that is if we look at gold and actually compare the gold chart or overlay the gold chart in this, we know there's a very strong historical pattern between those. Typically, whenever the bonds top and we see weakness in the bond market, we do see gold also heading lower. The correlation is in there, and they're doing that. So we continue to see that. There is a very strong possibility we don't see a major leg higher and a new significant bull market start into gold until next year. So that puts into context what we're seeing in here, and the fact that we're not seeing the buy interest coming in here from the commercials. They're not interested in being long gold at this moment. Say fast forward to what we're currently, or rewind rather, to what we currently see in gold. We certainly short term, we can have the possibility of a bounce from here around the 1650 area, and some nice trades potentially in here to the long side. But ultimately, say, see it moving lower, possibility of a rally towards the latter part of this year, but we could be seeing at a lot lower prices, and gold actually range bound or contained here for some time, possibly into 2022, before we see the next significant leg higher. Let's say if we do see developments in the dollar index, we see the dollar break through this 91.50. There is a possibility, and very real possibility, say looking at the seasonal pattern and the COT data for the dollar index, that we do see a significant rally in here in the dollar. So if that is the case, it will update and do another video on how that will impact gold as well. Of course, you can also join me live every Monday. I'll be going through the charts live. You can ask questions on our webinars and I'll be happy to help. But there's a lot of potential movement over the coming weeks. Trade carefully, look at the data for yourself, check out our website, come and look at the numbers. But at the moment, my bias is certainly medium term short in gold. So we will have that. There's a very real possibility of a bounce in here short term through March. I think we could do quite well in the gold market, but ultimately I see this market moving lower. Hopefully that's helped clarify a few things. You can see from the data that we just do not have the conditions there. We don't have the constituent parts in order to see a really significant move higher in gold.